What's up, everybody? It's Tas here. So the markets had quite a bounce back day today. The S&P and the Dow went up a little bit over 0.5%. We had the Nasdaq 100 go down 0.1%, but don't worry, the Russell ended up going up over 2% on the day. And today we're going to break down some technicals, go over a bunch of stocks I'm looking at, and I also want to share with you guys what I've been doing in the market. So sit back, relax, hit the like button, subscribe, make sure to go down below, get some free money, $30 from M1 Finance and 2 stocks from WeBull. And you guys could also check out my Patreon. Again, all of those are linked right down below. So let's get into it. S&P 500 today, as you guys can see, like I said, it went up 0.5%, and we saw a very big bounce back. If you guys see, earlier in the day, we ended up gapping down aggressively, which, mind you, I called this out yesterday, and we'll talk about that here in a second. We gapped down aggressively, went all the way to 38.50, and then at about 11 a.m. here on the East Coast, we hit 38.50 and rallied all the way to 39.20. That was the high of the day. So about a 70-point move intraday, which is over 1.6% of a move. And if you guys remember, like I said, I called this out yesterday. We talked about the descending triangle here on the hourly chart for the S&P. We talked about how, okay, we've been making lower highs, but we've been holding 38.85, 3900 as a support, and we've been downtrending into that support. And today, like I mentioned yesterday, we pretty much collapsed under it. The descending triangle played out, and we got so oversold. And I also mentioned this yesterday. The markets were oversold. I mean, you can see it here on the 4-hour, not too oversold, and you can see it on the hourly chart even better. But we dumped so aggressively from 39.40 all the way down to 38.88 just yesterday. This drop today got us even more oversold, and the bounce back is just pure just technicals, guys. That's how it works, right? Not always, you know. A lot of the time we do see, well, sometimes we do see falling knives that don't bounce back, but a lot of the time the way it works, we see a day of selling, 2 days of selling, followed by a bounce back. And that is kind of what we're seeing right now. We got the bounce back. Like I said, we were oversold, got to 38.50. We broke back over 38.85, and we closed right under the resistance of this descending triangle at this 50 moving average on the hourly chart. So this is another point where we must watch and take seriously, because look, this could very well be a point where the S&P ends up just dumping right back down again. This could be another lower high. We might take the lows out from today. That is very possible. I think that could happen. But then again, if we break the 50 moving average, we take the wedge out, or the descending triangle resistance out, whatever you want to call it, I think we're going to fill the gap probably in the short term to 39.50, followed by 39.60. But guys, by the looks of it, look at what happened at the end of the day. We hit that resistance point at 39.20, and we got hit super hard there in the past 5-10 minutes. The S&P lost about 0.25% in the last 5-10 minutes. So yeah, watch out for that resistance on the hourly chart when it comes to the S&P tomorrow, and 38.85 on the downside as support. And when it comes to the Nasdaq 100, guys, look at what happened today. We actually broke under the neckline. Neckline was at 12,780, 800, 750, right around there. I was talking about that yesterday a lot, and I've been mentioning the inverse head and shoulder here on the Nasdaq 100 a ton as of late. And I've mentioned before, look, if a neckline breaks in the inverse head and shoulder, it becomes invalid, and at that point, we might be going to test the lows. And the lows in this case were back in the beginning of March at about 12,200, 300, right around that area. And of course, granted, we didn't hit those lows today. I was not expecting us to go down to the lows today. But the fact that we broke the support, again, the neckline, this leads me to believe that there's downside momentum, and we might see those lows, maybe not tomorrow, but maybe in the next couple of days. And we'll see. And by days, I mean trading days. And we'll see. Obviously, we actually ripped back up. And I just said, obviously, actually, that was a weird way I said that. But you guys can see, yeah, we did break the neckline, but we closed right at it again. So maybe we rebound above 12,800. That's also in the cards, and maybe we go back to 13,000. So we'll see. We'll see. We did see a nice bounce back intraday here on the Nasdaq 100, and we'll see if that lasts. If we fail tomorrow at 12,850, I'd say, which was resistance all day today, that means I think we might dump down further and maybe test the lows or take the lows out from today on this intraday chart, and then we might go to the lows, like I said, from earlier in the beginning of March. So what do you guys think? Let me know in the comments. I'd love to know what you think when it comes to the market, and hit that like button if you haven't done so already, if you are finding value today. And if we go to this ThinkOrSwim, why did I just say that? Because I was looking at my OBS for a second. And if we look back here on ThinkOrSwim, for you guys, the screen didn't change, but for me it did. We can see, again, what we just saw on the Nasdaq 100, but if we talk a little bit about what I did today, and if you guys saw on Patreon earlier, I posted about this, I ended up adding more ChargePoint, CHPT, and this is one that I've been in for quite some time now, and it's been a rough ride. Let's just put it that way. ChargePoint, it's been a bloody ride. Same with a lot of the EV players. And by the way, I made an EV video earlier. I was going to say yesterday. That just goes to show where my head's at, guys. It's been a long day. But we can see that video from earlier today. You can see it. It's linked right down below. We covered a bunch of these EV-oriented stocks that got hit very hard. ChargePoint is one of them. If you guys didn't know, this one's down over 60%. It's right around 60% from its high at $49. And there's no question at $49, $50, this stock was pretty overheated, overvalued. And now it's at 20, which is where I actually bought into it. And look, this is a point where it's arguably at fair value, and I think if it gets to the teen level, 13, 14, 15, that's going to be undervalued, or even close to $10. That's a screaming buy, in my opinion. So look, guys, ChargePoint, I put a decent amount in today. I was in, it's been a while. Wow, I think I was in high 30s, 38, 39. It's been rough. I bought a little bit in the lower 30s, and now we're in the low 20s. So this is one that I've been averaging down, and I picked up an even heavier position today to kind of I didn't double up. I was thinking about doing that, but I want to save some money for in case it goes into the teens. So I didn't double my position up, but I added a substantial amount to the point where it brought down the average cost a ton, right? So now it's in the 20s, my average cost. So I'm happy about ChargePoint. And like I said, guys, look, it could go lower. This is a descending triangle, lower highs into the base support of $19.60, $20, right around there. And I think if this breaks, we're probably going to go down maybe 17, 18-ish dollars, and that's probably where I'd add more. So watch out for that. I added more ChargePoint today. That's pretty much all I did. I'm also still in a bunch of other stocks, guys. Tesla's one that went up 1.6% today. I'm holding this. It looks like it is holding that 630, 640 level of support, which is a pretty decent sign. I'm not really looking to rush money into Tesla quite yet, unless it's able to get itself back into the mid-500s. At that point, I probably would add some more money into Tesla. SLV is one that a lot of you guys have been asking me about. This is still one I'm holding. It is down just a little bit from where I got in. Silver has been rough. Silver got hit hard. Was that yesterday, today a little bit, but also silver bounced back. It was today. Look at that. Jeez, guys. Silver got slammed. That was today, pre-market. It went down to 24 an ounce, got all the way back to 25, 30 an ounce. That's pretty much where it is right now. So silver's bouncing back. I don't see a reason why I'm going to cut out of my SLV position. There's really no point. I'm still holding on to that. It's more of a hedge against, the dollar, the stock market. Silver is a good way to do that, in my opinion. So I'm still holding on to that SLV, right? Tattooed Chef's another one I'm still in. just riding that one out. Uptrend looks like it is trying to hold here on the 4-hour chart. You guys can see it on the yearly chart even better there, so that's a good sign. And Neo, guys, Neo's one that did well today, up 2.7%. You can see the 180 moving average here on the yearly chart is holding. So is this the bottom for Neo? It very well could be. Like I mentioned earlier, I think the low point could be around 30, 32. I don't see it going much lower than that. I mean, that is where, and you guys can see the head and shoulder. Right around 30 is where that right shoulder could complete, or who knows, it might already have completed based on where we are now. So that's what I'm doing, guys. Let me know what you guys are up to down below in the comments. I would love to know. And don't forget, if you want to join the Patreon for real-time buy and sell alerts, and not only my swing trading account, but my long-term investments as well, stocks I'm looking at, real-time buy and sell alerts, call-outs, morning update videos every Monday through Friday. That is on Patreon. Check that out. Linked right down below. So let's go over some stocks here. Disney is number 1 on the list for today, guys. And Disney is one that it's excuse me, guys. Geez. It's down about $22. Well, it was at the low point. It went from 203 down to about 182. That was a drop of 11%. And like we mentioned on Patreon this morning, and we mentioned it at 180 or 182. Now it's at 187. We talked about how 182, 180 was support in the beginning of March, also in the end and more towards the middle of February. And 182 was resistance in the end of 2020. So the fact that we held it, that's a good sign. We held a higher low as well. If I extend this or just draw this, you guys can see that's a higher low. So I think at this point in time, Disney has a good chance of filling the gap maybe to 190, 195. And if you are looking a little bit further out, you could argue that, yeah, Disney could fill the gap probably to the top of this channel on this in this uptrend on the 4-hour chart, which would put it anywhere from $200, $205, $210, $210 per share. So those are a couple levels that I'm looking out for when it comes to Disney. I really like the way it's holding the uptrend here, but also, mind you guys, it's not out of the woods yet. It's still in the downtrend on the hourly chart. So this must break in the short term. And then back on that 4-hour, that is where I think we fill the gap back up to 195, 200, 205, 210 in that general area. So Disney's number 1. CRM is another one which, thankfully, guys, I did not get in. You guys can see that 217.5 price trigger did not go off. We actually got hit there at 217 multiple times, and that's a good sign. I mean, and this goes to show, guys, when you have a plan, price targets, and you stick to your price targets, it works out. Because if I forced it and got in at 215, I'd be holding the bag right now. I'd be down a little bit. That's okay for some people. You know, you could average down, but for this particular position, the way I'm looking at it is I wanted to get in above 217, 218. Ideally, I was going to get in at like 220, right? And it just didn't work out. And now it looks like CRM looks like it wants to go down probably to about $200. $200 is where we held a couple weeks ago. You guys can see that was in the beginning of March. So now that we failed at 215, 17, expect it to go down a little bit more. And I can see a nice double bottom, maybe a relief rally at about 200. So watch out for that tomorrow. And honestly, for the rest of this month, I'd say. And by the way, guys, hopefully this next month, April, is better than the month we just had. That's probably what a lot of you guys are thinking, and I'm pretty sure it's, well, I don't know, obviously, but I'm hoping at least that it's going to be better. So watch out for CRM. AMD is another one, Advanced Micro Devices. This is one that's interesting, right? We've talked a lot about descending triangles today, and this is another one that I'm slowly seeing. Look at this. We're making lower highs, and you guys can see that clearly. Ever since the middle of February, we've been making those lower highs, and we're actually squeezing deeper and deeper into the support level, which is at about 75. And you guys notice AMD has held 75 in the beginning of March, all the way back in the beginning of November. And even in the middle of, what was that, September, we ended up holding right around $75. And I think this point, if we break under that, that is where this descending triangle is obviously going to play out, because if we collapse under that, we'll probably go to about $70 in my opinion, maybe $72. So watch out for that. Although another reason I'm looking at AMD is, look, if the descending triangle doesn't play out, maybe we get a double bottom point at $74, $75, and we end up seeing some sort of rally from there, maybe back up to the high 70s, 78, maybe $80, 84, and maybe not 84, but, maybe $82, higher 70s, lower 80s. So 75, needless to say, is a very big level on AMD. It is very much worth watching on this particular stock. And did you guys see GameStop? Let me see this. Moment of silence for the shorts. Look at this stock, guys. That's enough for the shorts there. And this went 52% up. Up, guys. 52% up today. Up $63. And, I mean, this is insane. On the 4-hour chart, what we're seeing is the 180 SMA ended up holding at a higher low at about $125. We ripped up over 180, and you can see the drastic move this was. It was all day pretty much. Short squeeze after short squeeze, or just, I don't even know, was this a short squeeze? It very well could have been. Or it's just the crazy mob behind the stock buying it up. I mean, and who knows, institutional investors, I mean, they are involved at this point. They're playing this whole game. So GameStop, look, guys, it's getting to $200. $200 is a big resistance at this point. We actually held that as support recently too. So I think 200 needs to break. If that does break, I'm thinking, okay, maybe we see a rally back to 220, 225, maybe 230, or who knows? Maybe it heats up and it rips right back to 220 or 250 plus. That could very well happen. So GameStop's on fire. AMC is also getting a little a rally off that, and I'd arguably look at this stock as more attractive than GameStop. And it's a little bit less risky, I'd say, a little bit less volatile as well. And you guys can see on the 4-hour chart for AMC, I mean, look, we're holding the uptrend. If I just, let me just quickly clear this dang drawing set. It's too sloppy. You guys can see, look, actually, let me pull up the 2-hour or 20-day chart. You can see the uptrend is holding, right? We're also approaching a resistance from the past couple of trading days at about $11.75, $12. And we had a massive 21% day today. And I think, okay, if $11.75, $12 breaks, I'm going to set an alert there. I think, and the 180 moving average here on the hourly chart breaks, I'm thinking this is off to the races. I think we're going to go back and test the highs from middle of March, $14, $15. I think that is very possible. So AMC, I like it a little bit more than GameStop, and I'm just watching both of them because, let's be honest, guys, they are super entertaining to watch, and hopefully I am too on YouTube here, which, yeah, crickets, probably not. But, yeah, guys, AMC, GameStop, Zoom is also another one, ZM, that I'm personally watching right now. And I'm seeing a potential, keyword potential, triple bottom, maybe, here at about 315. You guys can see, more like 310. You guys can see we bottomed out there in the beginning of March, a couple days ago, on the 18th roughly. And Today, we're at about 310, 314 right now. So I want to see, okay, this is the, it seems like it's oversold. We're towards the support of the overall wedge here. Again, we're seeing a triple bottom. So are we going to hold this and rip up, fill the gap maybe to 370, 365, 350? I think that's possible. I think there's some upside here on Zoom, although the overall momentum has been downwards for the past couple of months, honestly. But like I said earlier in the video, technicals, they work out. And by that, I mean, look, sometimes there's going to be falling knives where if you buy the dip, it keeps going down. And trust me, I know that feeling. You know that feeling. But other times, it's, look, it goes down a day or two, it bounces back up, followed by it goes down again, or it just goes up again, right? So it moves. It's kind of cycles, right? The market moves in cycles, and it's hard to predict it, but sometimes, you know, when things are oversold, risk reward is leaning more towards we can make money, which in this case, I think Zoom's leaning towards there, considering the technicals. You take the risk, and you take that. Of course, you got to have risk management as well, but you just take the risk. And I think for this case with Zoom, 315, 310, 320, that's a decent spot for a move back to the mid-high 300s. I think it's coming, guys. And the last one for today is Clorox, CLX. And you're probably like, Stas, Clorox, what the heck, man? Pandemic, CV, it's over. I'm not cleaning anything anymore. It's over. That may be what you're thinking. But the CEO of Clorox, and yeah, she doesn't think that. And I agree with her, actually. The new CEO thinks that the naysayers are wrong. And by naysayers, I mean people that think, like I said, Clorox is done now that CV is almost over. You know, we're getting to the end of this thing. But she thinks they're going to continue to use it after CV, and I personally think so as well, because of the habits that this has built. And I couldn't agree more. Listen, don't you feel like you've been more conscious about just cleaning things? Is it just me, or am I just a dirty person, right? But I just feel more conscious of cleaning things. I don't know if you guys were always like that, but this has made me, okay, I gotta clean my desk. I gotta do this, do that, especially at the gym. I'm not gonna lie. At the gym, I was that guy, which I'd sometimes wipe down my equipment, I'll be honest, but a lot of the time, I was that guy that just used the equipment and just get up and not wipe it down. But now with CV, I still go to the gym, of course, and I mean, look, I'm wiping down the equipment every single time. I'm using hand sanitizer, so it's instilled these habits in me where I'm cleaning the surfaces more. I'm paying attention to, okay, germs, this, that, the third, right? And I'm not paranoid or anything, but I'm just being more cognizant, and I'm just trying to be more safe, right? And more cleanly, or what the heck's the word? You guys know what I mean. And that is what a lot of people are feeling. And I think that this is going to stay for the next couple of years for sure. And who knows, maybe forever. There's people that are truly, they're scarred from this, from the CV. There's a lot of psychological, you know, they're super scared, and they're cleaning. And I think that this is going to stay. Sure, some people are going to forget about cleaning, but for the most part, it's here. And her conviction can be seen, and by her I mean the CEO, in an Atlanta suburb where last week Clorox opened a second production line at a factory that boosted the number of wipes canisters it can ship to 1.5 million each day. So they're producing more product, and to keep that facility busy as CV recedes, Rendell, the CEO, is increasing the company's marketing budget by 30% and is using the Clorox brands, the brand name, the sudden high profile, to push its new places, into new places, including partnerships with the NBA and Uber. And there's no doubt these technicals are ugly, right? Over the past couple of months, people have been selling this thing to the dirt, because look, The CV's over, right? Nobody's wanting to clean anything, right? This thing's in a bear market. It's down 21%. I think it's overlooked. Maybe it's not the best opportunity in the markets right now, but I think if you look at the 3-year chart, it'll give you some perspective as, okay, we sold off. We're in a bear market. We had an incredible run, but now we're seeing profit taking, and we're getting close to that 180 moving average here on the 3-year chart. There's a decent dividend as well. Technically speaking, this thing could bounce back. You know, that is what people are thinking. That is for sure what I'm thinking. And let me quickly pull up my Yahoo Finance. What's their dividend, guys? This is a decent dividend play. It's got to be, right? Clorox dividend is 2.3%. There you go. So if you're looking for a nice bounce back play, you're looking to park some money for a little bit, you know, I think CLX is decent with that dividend. I think you can't go wrong. So let's end off the video here, guys. Hope you all enjoyed it. If you did, hit the like button, subscribe, go down below. Make sure to get $30 from M1 Finance. Simply open up an account, deposit any amount of money, and you guys can get 2 stocks from WeBull with a $100 deposit. All of those are linked right down below. Same with my Patreon. If you guys want real-time buy and sell alerts, call-outs, morning update videos, that is linked right down below. So I'll catch you all in the next video. Thanks for watching. As always, I'll catch you all tomorrow. Stay safe out there, guys. Keep crushing the markets. Peace out.